All right, so welcome to the deep dive. Today, we're going to be really diving into Spencers Retail Limited and their Q3 performance for 2024. We've got a lot to unpack here. We got financials, press releases. We even got their insider trading prohibition code. So you're really going to dig into this and try to figure out, can they really thrive in this retail landscape? There's so much change and competition these
Oh,
days.
absolutely. It's a fascinating case study. And these documents, they're like a treasure map leading us straight to, the heart of their strategy.
I love that, a treasure map. And speaking of treasure, I noticed right away that Spencer's released both standalone and consolidated financials. Now, why would they do that? Why not just give us the full picture all at once?
Well, it's actually pretty common practice. You see, standalone focuses on Spencer's itself, just their core operations, while the consolidated numbers, those bring in the subsidiaries like Nature's Basket. So it lets investors see the individual pieces and the whole pie, so to speak.
Okay, so it's like getting a behind-the-scenes look at how each ingredient contributes to the final dish. Now, speaking of delicious dishes, one thing that really jumped out at me was this. Spencer's achieved operational profitability, positive EBITDA, for the first time in, forever.
22 quarters to be exact, over 5 years. That's not just a number, that's a sign of real financial health. It shows they're making money from their core business activities, which is a big deal for attracting investors and fueling future growth.
Okay, so they're definitely cooking with gas now.
Mhm.
But hold on, I also noticed their chairman mentioned a soft, festive trading environment. That doesn't exactly sound like a reason to celebrate. How did they manage profitability if things were, well, soft?
Yeah, the festive season in India, that's usually a huge boom for retail. So flat sales growth during that period, that suggests consumers were being a bit more cautious. But here's the thing. Spencer's got really laser focused on efficiency cost cuts, strategic store closures, and they've really tightened their belt.
So they battened down the hatches and rode out the storm, huh? Smart move. Uh, I'm noticing a theme here because I see they also slashed operating costs, like way down to 70 crore from 102 crore the same quarter last year. And their gross margins, up to 19.7%. Are these connected?
Absolutely. Spencer's is shifting gears. They're moving from just chasing pure revenue growth to really maximizing profitability from the stores they have. It's less about getting bigger, more about getting better.
I like that less is more sometimes. Speaking of getting better, what about their new quick delivery service, JIFFY?
Uh-huh.
Seems like a pretty bold move in the midst of all this cost cutting. How does that fit into their overall strategy?
JIFFY. That's a key piece of their two-pronged approach. On one hand, they're streamlining their physical stores, making them lean and profitable. But they also know the future is online, right? So JFFY taps into that growing demand for convenience and speed.
Makes sense. They're not putting all their eggs in one basket. Now let's talk about Nature's Basket for a second. They grew 2% year on year, hit 86 crore in revenue, even opened 2 new artisan pantry stores. What's their role in this whole Spencer's picture?
Nature's Basket. Think of them as Spencer's upscale cousin, catering to a more, well, niche and premium market gourmet foods, healthy options, all about the experience. Those artisan pantry stores, those likely double down on that specialization, even more unique offerings.
Interesting. So they're kind of hedging their bets, appealing to different kinds of shoppers with different needs. But here's something I don't quite get. Their consolidated revenue actually dropped 21% year on year, down to 517 crore. Yet they still achieved that positive EBITDA of 15 crore. How is that possible?
Remember those strategic store closures we talked about? That move, it reduces revenue in the short term, sure, but it also dramatically cuts costs, leading to a much healthier bottom line. Sometimes shrinking strategically can be the path to greater profitability.
Okay, so sometimes less is more, it seems. I found this quote from their earnings presentation that I think really sums things up. It says, validates our decision of regional exit, focus on core geographies, aggressively cutting costs, and investing in e-com. They're not mincing words, are they?
That's a mission statement right there. They're doubling down on this new strategy, operational efficiency, core markets, and a big bet on e-commerce. It's a very clear roadmap for their future.
So they're not just reacting to the market, they're actively shaping it. I like that. But before we move on to their insider trading code, what stands out to you so far? What's the big takeaway from all this?
Honestly, what fascinates me is that Spencer's isn't just surviving, they're thriving in what's a pretty tough environment. This strategic pivot to profitability, even if it means some short-term sacrifices, it shows real vision. It's like they're playing chess while others are playing checkers. It's like they're playing chess while everyone else is playing checkers. Speaking of strategic moves, let's take a look at their insider trading prohibition code. This thing is extensive.
Yeah, this document is really thorough. Why would Spencers even need something this detailed? I mean, isn't it obvious that insider trading is bad?
Well, yeah, it's one thing to say don't do it, but companies need clear rules, procedures, to actually prevent it. This code, it outlines everything. How to handle confidential information, pre-clearing trades by designated persons, the whole 9 yards.
Designated persons.
Yeah.
So not just anyone can buy and sell Spencer stock whenever they feel like it.
Nope, not at all. We're talking executives, board members, anyone with access to non-public information. This code, it creates guardrails, to ensure a level playing field for all investors.
I'm sensing a pattern here. Spencer's is really big on transparency and fairness. Can you give me an example of what kind of insider information could get someone in trouble?
Sure. Let's say a Spencer's executive learns about a major acquisition before it's announced publicly. That kind of news could send the stock price through the roof. If they buy shares based on that knowledge, that's illegal insider trading. Plain and simple.
Ah, so it's not just about being honest, it's about preventing even the appearance of an unfair advantage. But this code goes beyond just defining what's wrong, right? It sets up a whole system to prevent things from going wrong in the first place.
Exactly. They've got procedures for reporting trades, handling confidential information, even these things called trading windows, where insiders are allowed to buy or sell stock.
Trading windows?
Yeah.
That sounds kind of interesting. What are those all about?
Think of it like setting boundaries. Trading windows are specific periods when designated persons are permitted to trade Spencer's stock. Outside of these windows, trading is generally off limits for them.
Okay, so it's about controlling the flow of information, preventing anyone from acting on insider knowledge. Makes sense.
Precisely. And Spencer's, they're strict about when these windows open and close. For example, they're typically closed before and after earnings announcements. That way, no one can profit from having early access to those results.
So it all ties back to that transparency and fairness we were talking about. It's not just about playing by the rules, it's about making sure everyone's playing by the same rules.
Couldn't have said it better myself. And Spencer's, they go even further with something called pre-clearance of trades. So even when the window is open, designated persons have to get approval from a compliance officer before trading any stock.
Wow, so it's not a free-for-all, even during those windows. They're really serious about this.
Absolutely. The compliance officer reviews each trade, making sure there's no conflict of interest or insider information involved. It's a rigorous process, but it's essential for maintaining investor trust and, avoiding any legal headaches down the road.
So they're playing by the rules, they're playing fair, and they're making sure everyone knows it. That's a pretty strong message, especially for a company trying to navigate this, this crazy market. But how does all of this connect to their social and environmental responsibility? Aren't those kind of like separate issues?
Well, they might seem separate at first glance, but they're all part of a bigger picture, really. ESG, environmental, social, and governance. It's about how a company interacts with the world around it. Sustainability, ethics, long-term thinking, all that good stuff.
So it's not just about profits, it's about impact. Where does Spencer stand on all of that?
They've made some pretty significant commitments, actually. For starters, they've implemented energy-efficient lighting and cooling systems in their stores to reduce their carbon footprint,
Yeah.
And they're all about responsible sourcing, partnering with local farmers and suppliers who follow sustainable practices.
That's a good start. What about the social part of ESG? How do they treat their employees?
Spencer's puts a strong emphasis on employee well-being, fair wages, comprehensive benefits, opportunities for career advancement, the whole package. They're also committed to diversity and inclusion, recognizing that a mix of backgrounds and perspectives makes for a stronger organization.
I like that. They're walking the walk, not just talking the talk. But governance can sometimes feel a bit abstract. How does Spencer show good corporate governance in a way we can, really see?
Well, governance is all about transparency, accountability, and making ethical decisions. So think independent board members providing oversight, robust risk management, strong compliance programs. Spencer's has all of that in place.
Checks and balances at every level.
You got it. They're not just saying they're ethical, they're building systems that ensure ethical behavior. And it's not just about ticking boxes for regulators. They publish these really detailed sustainability reports outlining their ESG goals and progress.
So they're holding themselves accountable and being transparent about it. That's impressive.
Transparency is key, especially for investors and consumers who are increasingly demanding that companies, align with their values.
It's like everything we've discussed today: financial health, ethical conduct, social responsibility. It all adds up to a bigger picture of who Spencer's is as a company. They're not just focused on the bottom line, they're thinking about the long game.
Exactly. And that long game includes things like a healthy planet and a just society. It's about realizing that business success isn't just about profit. It's about making a positive impact on the world.
So it sounds like Spencer's are really trying to build a business that's not just profitable, but also sustainable and ethical. But how can we, as consumers and investors, how can we actually tell if companies are truly committed to this whole ESG thing? Or are they just jumping on the bandwagon?
That is the million-dollar question, isn't it? It's easy to make promises, but it's a lot harder to actually deliver. I'd say look for concrete actions, measurable results. Are they actually reducing their carbon emissions? Are they improving their supply chains? Are they investing in their employees and the communities where they operate? Those are the things that really matter.
Don't just take their word for it. Look at what they're actually doing. Now, Spencer's publishes these sustainability reports. Are those just like PR fluff, or do they actually provide some valuable insights?
Oh, sustainability reports, those can be a goldmine of information. They often lay out very specific goals, they track key metrics, and they highlight areas where the company is making progress or, maybe falling short. Think of it as a report card on their ESG performance.
Okay, so it's worth taking the time to really dig into those reports if you want to, like see the receipts. But let's be honest, most people aren't going to read through pages and pages of corporate reports.
Yeah.
What are some red flags to watch out for? That might suggest a company isn't as committed to ESG as they claim to be.
Good question. I'd say keep an eye out for vague language, lofty goals without clear plans for how they're going to achieve them. And also look for inconsistencies between their words and their actions. Do they talk a big game about sustainability but still have, major environmental violations? Do they tout their commitment to diversity but have a leadership team that's, well, not very diverse?
So it's about looking for substance over style. Don't be swayed by fancy buzzwords or slick marketing campaigns. Look for the real, tangible evidence.
Exactly. And don't be afraid to ask questions. If you're a customer, ask about their sourcing practices or their environmental policies. If you're an investor, challenge them on their ESG performance during shareholder meetings. You have a voice, use it.
This has been such an eye-opening deep dive. We've uncovered Spencer's strategic focus on profitability, their dedication to ethical conduct, and their commitment to these ESG principles. What are your final thoughts as we wrap up this exploration?
Spencer's really strikes me as a company that understands that business success in the 21st century, it's about more than just profits. It's about building a business that's good for people, good for the planet, good for the long term. They're not perfect. No company is. But they seem to be moving in the right direction.
It's been really inspiring to see a company like Spencer's taking these issues seriously. But as you said, it's up to all of us, consumers, investors, citizens, to hold companies accountable and demand better.
Absolutely. We have more power than we realize. By supporting businesses that align with our values, we can create a world where doing good is also good for business.
That's a powerful message to end on. So as we conclude this deep dive, I encourage you to take a closer look at the companies you support, where you shop, where you invest, where you work, and consider how your choices can contribute to a more sustainable and just world. Thanks for joining us on this journey. Coming